What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the most highly requested stock on my YouTube channel. If we're looking at views and comments, this is the SOFI stock. People are starting to go crazy about this one when they see the upside opportunity that is just sitting there waiting for people to get in. This is an amazing buy right now when you look at other disruptive fintech companies and their valuations. I've been explaining to people for a while now that IPOs are a scam. The inside investors in those stocks just want to pump them up as high as they possibly can and dump them on retail investors. And then on top of that, they want to make SPAC stocks look bad, like they're a scam investment because they're going the SPAC route, when in reality, SPAC routes give everyone the same opportunity to invest at that $10, bottom line range. And that's what institutional investors don't like about the SPAC stocks. We're going to be taking a look into the SOFI stock and show why it's an amazing buy right now at its price range. Also, a brand new article that just came out on SOFI, and we'll compare it to another one of the IPO fintech disruptor stocks that just came out last year. And if you feel any of this information gives you any better insight on the SOFI stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. There's going to be a lot of great information coming out, and you don't want to miss it. Let's get into the video. So guys, obviously SOFI stock has been beaten up. This stock hit nearly a $30 high a couple of months ago, and it just keeps getting beat up and beat up. And I've been explaining in my last couple videos that this stock can see anywhere in the $15 to $17 range after this initial pipe sell-off, and that's what we exactly saw last week. If you look at the 5-day chart, it looks like this stock hit a low of nearly $17.50. So we were right in line of what the stock could drop to. Anywhere in that $15 to $17 range is definitely a buying opportunity. But guys, I want you to just look at, the valuation on the multiple of the market cap right now, okay? And remember, this is a SPAC stock, and it looks like, the CEO and the management did that because they are here for the retail investors. They are not here to scam the retail investors like the IPO stocks. This stock has trading at a $14.5 billion market cap on revenue last year of around $600 million. We'll take a look real quick. This is their investor presentation. If you look at revenue right here for 2020, we're at about $600 million for 2020 and a solid increase of about 58% for about $980 million for 2021. But I just want you guys to look at this 2020 revenue and show you what kind of deal you're getting to other IPO disruptor stocks. Take a look at Snowflake. I've gone over this in multiple videos, and I want anyone new to see this. Snowflake was one of the biggest IPOs in 2020. I mean, this stock was trading at around $400 plus coming out the gate of the IPO route. And now that it's pulled back almost 50%, guys, we can see that it's trading at about $237, and the market cap is still at $70 billion after the drastic sell-off. So this thing was trading at, $120 billion market cap. Let's take a look at, revenue, because guys, revenue, I understand margins are important, EBITDA is important, growth is important, everything's important, but the foundation of a company is always going to start with revenue, because revenue is how you gain profits. It's how you, gain customers. You need more revenue. So revenue is just a starting base of valuating a stock, and that's the number one thing you should start with, is the multiple on the market cap of the company. And guys, Snowflake's doing $590 million in revenue. Okay, so they're doing $590 million in revenue for 2020, and SOFI is doing a little bit more at $600 million in revenue. Whoa, guys, we're trading at $14 billion market cap, and Snowflake's trading at a $70 billion market cap, $15 billion, $30 billion, $45 billion, $60 billion, $75 billion. This is trading at 500 times SOFI right now valuation, and it pulled back 50%, was trading at like 100 plus billion valuation. Do you guys see the manipulation in the stock market, what the big whales do to retail investors? They run it up in these IPOs, a price that you can't get in at. Retail chases, and they just dump everything for months and months and months and just keep dumping and dumping and dumping, guys. And even that this thing's been dumped, it's trading at 70 billion right now. The biggest IPO of 2020, trading at, you know, a 70 times multiple, more like 100 times multiple on the 2020 revenue, guys. Do you see the opportunity in SoFi right now? In all honesty, I don't want to be trading at a 70 billion market cap right now. I wouldn't even mind be trading at, you know, like a 40 billion market cap. And guys, that leaves you potentially close to a 3x valuation as of right now. You could potentially 3x your money, you know, leading into next year. If we can just get to like a 45 billion market cap, which is going to put you, you know, much lower than Snowflake. So guys, can you see the opportunity right now? I'll go back and forth. 70 billion, 14 billion, 70 billion, 14 billion. These are doing the same numbers right now, guys. They're doing the same kind of numbers in revenue and growth right now. It's just freaking Snowflake's trading at 5x. Okay, I'm off of this topic, okay? Let's take a look at the article that just came out. I just want to make sure you guys see the opportunity and the scams out in the market right now with these IPOs. They don't want you getting in on these SPAC stocks. They keep selling off. That's why they keep holding these stocks down, selling off, because they want to buy in early on these SPAC stocks with crazy growth opportunity. This is an article put out by Luke Longo. So Luke Longo is a Wall Street investor. He called out great stocks like Chegg, Neo at an early time frame, you know, when they were trading at like $5. So he understands to spot opportunity at an early stage. So he's one of those younger investors that likes that high growth opportunity. So I really do appreciate Luke Longo's insights. Sometimes he does invest in a little bit more speculation, but this is definitely not speculation. This is fundamentally sound, high growth opportunity, disruptive technology that is disrupting a legacy market, guys. Wall Street and your friends both like SoFi, so buy SoFi stock. SoFi is disrupting the fintech industry and people are taking notice. Why we like SoFi stock? SoFi is next generation disruptor in the fintech space that we believe has the potential to turn into the Amazon of finance. As interest in financial technology continues to grow, the best players in the space like SoFi will begin to really put the heat to banks like Wells Fargo, trash, Bank of America, trash. There's massive potential in the space, in particular with SoFi. The team making the magic happen was founded by Stanford business students in 2011. This team experienced the bleak student loan financial industry firsthand. They quickly identified the main glaring issue. First, banking is primarily physical. As a result, a lot of property-related fees that the banks incur get passed on to consumers. Second, student loans features far too many middlemen, each with their own fees they want to collect, and are anything but simple. The Stanford students created SoFi with the intention of leveraging automation and a digital-first experience to create incredibly simple and inexpensive access to student loan financing. And over the past decade, this solution clearing struck a nerve. Students all over the U.S. have refinanced their loans through SoFi to take advantage of lower rates. Contrary to the traditional system that's in place, SoFi passes their cost to savings on to students rather than fees with a novel concept. They explain that there's 500 million accounts up for grabs, with the top 10 legacy banks holding 50% of the consumer 500 million bank accounts. They are going after the banks rather quickly, and the member growth is accelerating, guys. If we take a look right here, on track to exceed 3 million members in 2021, up 75% after 6 consecutive quarters of accelerating year-over-year growth. We can see right now they're on track to hit that 3 million member mark, which would include 75% year-over-year growth. Also, if you take a look, guys, you couldn't be investing at a better time. This is their EBITDA right here, guys. They've been negative EBITDA 2018, 227, negative 149 in 2019, negative 66. They are looking for a positive EBITDA of $27 million this year. And then the EBITDA just starts to get crazy, guys. Over $250 million next year is potentially gonna happen. What SoFi brings to fintech? Over the last few years, SoFi has created a series of digital-first fintech solutions to serve a variety of use cases. First, we have SoFi Money, SoFi Invest, SoFi Credit Cards, SoFi Relay, SoFi Education. It sounds like a lot, it really is, and it is all bundled into SoFi's native mobile app. It is a one-stop shop destination for managing and making money. In our opinion, this is the future of banking, and all of our friends we've showed SoFi to would agree. And Rosenblatt's initiating coverage on SoFi stock with a buy rating and a $30 price target is a huge vote of confidence too. On top of that, if you go to tip ranks for SoFi Technologies, there was another buy rating at the $25 range, it looks like. So right now, you still have upside of nearly 52% with a 27.50 buy rating heading into the next earnings. So this is a great opportunity to get in anywhere in that $16 to $18 range right now with the SoFi stock. You can see, Wall Street analysts are starting to cover this stock right now. And once again, updated SoFi going public via SPAC deal with profitability expected in 2021, which I showed you with that EBITDA positive coming this year. Once again, I want you guys to see opportunity in the market as far as valuations with these disruptive technology stocks. And this one is far undervalued compared to other IPOs that went public. And it looks like that is why the stock is getting beat up so heavily the past month since that merger, guys. This thing was literally trading at like 25 bucks, just a month ago, guys. Look at that, 24 bucks on June 9th. So this thing has been beaten down 30%. This is a buying opportunity once again, and there is so much opportunity inside the SoFi stock, and the word is beginning to get out. And I don't want you to be buying this stock if you think it's a get rich quick, day trade scheme. I want you guys to invest in this with confidence. Don't paper hand out of this stock if the volatility shows up. You got to diamond hand this stock for years to come, and that's when you're going to get the full outcome of their growth and their EBITDA positive. Once again, if you felt this video gave you any better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all the growth stocks and spec plays. There's going to be a lot of information, and you don't want to miss it. I hope you have a great day.